if you just go down to your Documents tab, you should be able to receive the weekly thoughts in there. Let's just get into it right now. All right, so I'm just going to scroll on down to what's kind of important. In August, the month of August, and remember the asterisk denotes middle of the month, which we are officially in the middle of the month. Typically, the yen, which we've been talking about, we're a little early discussing the yen so we can know what to watch for. Wheat actually bottoms. Gold actually bottoms. Gold actually, if you look down here, potential swing trades. Gold formed a weekly high close doji. The yen, we would get a daily bullish last conditional change if we get a close above 80.81. The euro, that's a daily. Euro, we have a weekly high close doji and a PPS buy signal. Soybeans, we've been in a low close doji since I put it in the sheets for, I don't know, 3 weeks ago, I guess. I would have to go back and double check the 3-week comment, but I believe it was maybe 4 weeks ago. Beginning of the month, didn't we put in there it is. Soybeans generated a weekly bearish LCD, blah, 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 and it's seasonally weak. Cocoa generated a weekly sell signal. I mean, both of those two products have done nothing but generate profits on the short side since that was posted. And I believe that was created for the week beginning July 27th. So not bad analysis there for those that are interested in trading commodities. So coffee, we generated a weekly PPS buy mode, but the market accelerated so far off the moving average, you would look, if you're interested in trading coffee, to look for a pullback to buy near 133.5. I'll whip up some charts and we'll go through this. I think everyone can take the time to read the market thoughts later. What I'm going to try to do, or I attempted to do, is create an email and send this by email to the trading room subscribers only. I'm no longer sending this out to the entire database on Monday. So I would like to see if I can get this to Monday planning and scanning, as well as the trading room only, to have this. Now, what I have done in the last couple weeks also, just as an informing you, I have cheated and taken my trading room analysis, which is what this is for, and superimposed it with a little bit of PA stock alerts. So some of you get PA stock alerts and you'd be like, well, John wrote kind of some of this up in the email he sent for PA stock alerts, and it's kind of like cross-pollinating a hybrid thing. But, you know, I do my research for the room, for the week, for my own trading, and for you guys, and then as well as what we're combining with PA stock alerts, and, you know, and there we have it. But in any event, I also wanted to point out that while we did get a little bit of, if you read through this, the insurance sector, KIE, typically peaks out. And then we've already seen a lot of names, Allstate, different insurers go down while other insurers go up. So it's kind of like property casualty is a different sector, health, you know, they're all kind of subsectors of the insurers, just like the XLF financials. And this is what I'm going to talk about here this morning, is in the financials, the banks, you got banks, regional banks, insurers, credit card company, as well as exchanges, all mixed in within the financials. But if we look at subsectors, and one in particular that we've been going over in the trading room were some of the broker-dealers, your E-Trade and your Schwab. And within that, we have a broker-dealer sector, the XBD. Now, years past, not everyone and every Tom, Dick, and Harry of a company went to go public. It was, you know, there were private companies at one point years ago. Now, everyone wants to be a publicly held company. Every retail store, everything seems to be public right now. So back in the day, you didn't have the exchanges public. They were private, right? And so the CME and ICE and everyone's now public, but they do fall in that broker-dealer sector, right? But right now, Legg Mason is a money manager. And so I want to take a kind of a gander at some of these names real quick for you guys. So Legg Mason, as a money manager, it's kind of funny. They've actually performed a lot worse than the overall stock market. So, you know, maybe they're long boatloads of Green Mountain Coffee Roaster, because that's kind of what that chart looks like. I don't want to bash anyone per se, but some of the asset managers have done a lot better than others. You can see the overall seasonal trend that goes down with Legg Mason, and you can see the overall volume on this sell-off has been fairly heavy. Last week, major rejection, you know, a $3 drop off the high, the swing high. And here's another interesting one. Let's take a look at Ben Franklin. I mean, it's like fallen off the cliff in the last month. So, I mean, if you were trading around 50 and you're at 43, obviously, you know, you have that seasonally weak period of time, but boy, that was a dramatic sell-off on significant volume. So I don't know what these guys have exposure to. China? Do they have exposure to things they're not talking about? I don't know, but boy, this is longer-term monthly analysis, weekly analysis. Even though we are trading close to the monthly pivot support, the asset managers are getting a little bit of, I'd say, cut off at the knees. This is Goldman Sachs, and, you know, they came out, even though they had a daily high close doji at monthly support, they are in that space that's demonstrating a lot of weakness. So the key for me is, do I trust that daily high close doji, even though it's a great setup? High close doji at monthly pivot support. Great setup, right? Maybe they can bounce a little bit, but looking at the volume crossover here, looking at the monthly chart, even though we had this long shooting star type formation, we haven't made any monthly sell signals. The monthly volume is starting to roll over. So I want to stay away from stocks that are in sectors that are seasonally weak, that their brethren are also getting decimated. I don't think Goldman Sachs, they came out with a call that they thought Green Mountain Coffee Roaster was kind of a good value buy at 70. I wonder how they feel at 50. So not all stocks that Goldman Sachs and everything that they get into is absolutely correct, or, you know, no one's 100% perfect. Look at me, right? So the bottom line is simply this. I think that we're looking for trading opportunities and trying to look for sectors or trades, and I would have to say, if we take a look at it, and as I wrote about, and I'm covering exactly what we wrote about here, let's take a gander here at JP Morgan, because JP Morgan's been a darling. They loaded that one up. We've talked about it in the past. We had the long channel to the upside. All of a sudden, in the last, you know, let's call it 8 weeks or so, 1, 2, 3, 4, 5, 6, 7, 8 weeks with the doji, you know, these long rejection candles, the crossover of the volume, the seasonally weak period of time. You know, I can't really suspect, even though we have long shadows off these weekly lows, I can't suspect we're going very far to the upside. So, you know, we are in a situation here with some of the names that are weaker than others. Ben Franklin, obviously. Schwab, obviously. Looking at Legg Mason, obviously. So some of the banks aren't doing as bad. We don't have a weekly sell. We don't have a monthly sell. So I'd be looking for a rally up at least back into the 70 bucks. That's $2 this week, to see how we respond up against those highs one more time if we get any follow-through strength. It is not the greatest time of the year to be buying this stuff. In fact, the strongest weekly or the strongest seasonal trend to depreciate starts now. And it goes and lasts into, as you can see, October. So that's something to, at these lofty levels, to, you know, to pay attention to as well. Let's take a gander at what I was referring, SCHW. For those that are interested in equities, we try to provide a lot of everything in this room: commodities, seasonal trades, swing trades, stock equity position trades. And with that said, I look at the same thing. It's not really responding well to continued upside. Charles Schwab. The volume, though, broke out to the upside relative to its last high, but the volume relative to last September's high is, again, what we have been seeing time and time again. Long-term monthly up, relatively light volume on the intermediate weekly, and then the daily, if you take a look at the daily, it's all just not in sync. So it's like, take your time frame, which one do you believe? Long-term looks good. Long-term looks better. I wouldn't say it looks great, but it looks better after this huge run-up in the market. Is it capable of continuing beyond its quarterly pivot at 36.51 as we come down to the wire of the midpoint of the quarter? And that's where we're at. We're halftime of the third quarter, kids, believe it or not. Every day ticks by with, I don't know, internet issue, China cyber attack accusations, China devaluation of currencies, and our government's on vacation, everyone's on vacation, and there's no real trend or follow through with a lot of markets. But I could tell you, when I look at multiple names respecting their seasonality, it stopped going up. These are sectors that maybe we could, look at as we deal with the XLF, as it appears to look strong. It is in to me, a rising wedge type of pattern. So any further strengths in the XLF itself, I think it's worthy of respecting the longer-term seasonality here going into September. So any further strength and retest of those highs, I'll be looking at some selling opportunities, but let's nitpick and let's get it down to detail and maybe look at the XBD sector and the names that I've just pointed out to you. And you know what? Ben Franklin, I should take it off the list, and I'm going to tell you why. It's already depreciated significantly, and it's taken out the air of the tire. So it's like trying to, puncture a flat tire. It's kind of already flat. You know what I mean? So it's like killing a horse twice. I don't know if they're going out of business. That's for sure. They're not going out of business, and they are near support, and they might just consolidate a bit. But they could attract weakness for its other stocks or brethren stocks. Okay, so anyway, let's take a look at gold real quick. As we talked last week, we did get in gold, and let's try to look at the, here we go. So we got an official high close doji on gold, right? And we talked about it last week, and here it is at 1120, strong seasonality, good daily volume. It closed and it traded and it supported against this shelf of resistance here. We put out as much a warning and alert during the day and said, watch this towards the close. I know I did, as I was dealing with Dell for 2 hours and 40 some odd minutes on Friday, which is very painful. Probably the most painful, one technician, two technician, it all depends on who you get. But when they say, sir, I need you to shut down the computer properly, it's kind of like, lady, I started using computers before you were born. Don't insult my intelligence. I know how to turn a computer off. Anyway, I'll just throw that out there. So you know my personality probably, and you know that didn't bode well. But long and the short of it is, I did see a post by Andy Wyatt, one of our members, saying, hey guys, who stuck here through and through the end on Friday, and said we formed the official high close doji. And it is seeing some follow through. So hopefully you got an edge on that, because we had talked about it all last week. And that's why we talk about what might become, so that you can plan ahead, not after the fact. This is not the after, oh, see, I was looking at that, and, you guys should have seen it too. No, we talked about that in detail. So let's take a gander here at the Japanese yen as well, because that's another one that we've been kind of waiting for, response. We had a lot of these long shadows. The weekly volume did not crop up like I would like to, but you can still see that the strongest part of the seasonal trend starts to begin soon. So what we would be looking for, and if you take a gander up here at around 80, a daily close above that 80.80 is right above this high, right up there. This particular day, right there. So we get a close over that level. It also stopped dead on a dime. We're in a daily buy mode. So can you imagine if you get a cross and close above that swing high in the strong seasonality, and if we can get a volume push, this is the one I want, folks. I think we will get a volume. If you get that volume push, man, this thing has a little bit of room to run, probably 83.5, as I pointed out to you the other day. You know, I'm not looking for this thing to run up to 98, but, you know, we could simply, you know, get right back up to the monthly high of May. The May high, look where we were pretty much all year, and then just see. And unfortunately, it will probably be one of those all or none type reversals. As we get into the end of the quarter, what happens for funds after periods of time in long trending markets? They take profits. No one ever said they had to wait till the final minute of the quarter. So watch for breakouts in the yen. Also in the euro currency, which is synonymous with a short dollar trade. And the euro currency did generate daily high close dojis over here. Yes, it's near the monthly pivot resistance. Yes, we are closer to if we get up into the 115, which is what I think the market's capable of doing. Seasonally, though, it doesn't tend to run until about the first after Labor Day, and then it has a very strong seasonal tendency. But this is a bona fide doji. This is a high close doji. It closed over the quarterly pivot, the blue line, and this market could see legs and room to run. Now, this is a last conditional change candle up here. So two ways to play it. You can play the FXE to the upside, and inversely, the dollar index. Let's take a look at that, because we did this the other day. We had a daily low close doji, a double doji star. The market went down right to monthly support, but ironically, it's in a downside channel that we drew in for you guys last week. And for those that weren't, it was midweek, so for those that weren't here, it did not generate a weekly low close doji. Missed it by a few ticks, and it's at quarterly pivot point. So I'd be looking for the market, and a number I want a lot of you guys to focus in on is this week ending July 17th. The week ending July 17th, that area right there, that 95.73, guys, we get underneath the quarterly pivot and get underneath that last conditional change candle. You know, you can kind of fill in the blanks yourself and look for maybe a retracement back down to these lows for whatever reason. Seasonally, this is not the time to be buying dollar assets or dollar index currency. So it's a backdoor way of looking at of looking at the euro, and of course looking at the yen, and then looking at gold, which are all dollar-based assets, which seem to be the theme of what I was kind of talking about in this week's weekly planning and scanning. So bullish stocks, we have a couple weeks ago I gave some bullish stock recommendations. One was XLU as an ETF sector. One was MAC. And again, 2 weeks ago, both of those have kind of, you know, fared okay. I mean, obviously it's not making anyone rich quick, but it is on the right side of the market for, you know, those short-term trades. Now let's take a look at ADP, which I found interesting. ADP to the upside, from a seasonal perspective, it starts to run. It did generate that high close doji type pattern. How would you trade that? Well, it closed above the quarterly pivot, the blue line. The daily volume looks good. And then here's the struggle. The monthly volume's weak, the weekly volume's fairly strong, and the daily volume is fairly strong. So you have 2 out of 3 time frames looking good. So perhaps in time, this thing can get back up to test maybe the June 30th, which if it's an $83 stock, let's call it, resistance next stop is going to be 86. So is that, you know, I guess that's how you could filter out whether you like that trade or not. That's a $3 initial profit objective. Next, let's take a look at AIV. We talked about REITs, we talked about utilities, and this is AIV. The monthly chart volume looks great. The monthly is in a buy mode. Is this a flag formation getting ready to accelerate to the upside? Because actually if it is, it measures up to around 45 to 46. That would be A, B, C, D wave, or flag formation measuring objective. Seasonally, middle of September, is it capable of running up that much in that short period of time? The volume on a weekly is looking good. The volume on a daily doesn't match or mirror the it doesn't mirror the daily. But I can tell you this, if this might be one to put on the watch list, because if this equal opposite and you blow through 40.59 and you close over there at the end of the week, this thing could take a nice little run. So watch AIV. Next, EQR. EQR, another one in the, again, real estate residential investment trust. Monthly volume looks great. The weekly looks actually much better. Looks like it's conforming to this trend. Weeks ago, back in middle of June, it had a high closed doji on a weekly basis, buy signal, and you know what? It's been respecting that ever since. The daily volume looks a little better. So longer term trades, now this is a little bit more expensive, but this is a stock that could see, again, almost very similar pattern, very similar to AIV. Look at the almost equal and greater, and almost looks like flag formation. Let me share with you SAIV. Go over here and take a look at AIV. There's your equal and greater. Here's your flag. So two stocks, same pattern. Pretty bizarre. Two stocks in the same group with the same pattern. If you tell me that this market's not contrived, manipulated, I'm telling you that's bullshit. And I have to say the word, because you cannot tend to get stocks all trading very similar in nature unless they are controlled or manipulated by the masses, and the masses is not the general public in this business. So there it is. Now let's take a look at the bearish side of the market and see where that's coming from. We had weekly low close dojis. This is Ryder, trucking, transportation. What is wrong with these boys? Well, there's supposed to be something wrong with these boys. They have a seasonally weak period of time. Here's your doji. There's your low close doji. Here's your arcing top pattern. This looks like the market generated a sell signal, came back, just gave us a pocket resistance of the monthly MAs, and it wants to kind of maybe come back and test the lows for the year. And that would be, if it is going to go and test the lows for the year, when would it do it? In probably the worst seasonal time frame of the year, which is entering right now on weak volume, monthly, weekly, daily, everything in sync to the downside with Ryder. Let's take a look at Reynolds. Weekly low close doji after a spectacular run to the upside in like the worst time of the year to be buying this stuff after a huge monthly run up, lighter volume. That's volume divergence, by the way. So from May 29th to the July 31st high, and you got a light volume run up and a seasonally weak period of time. Reynolds is one that is another, call it what you want, bearish strategy to the downside. Target back to 77. You figure out whether or not that's a trade that you want to consider. Bearish, neutral for the next month and a half. Let's go there. Okay. Now let's take a look at SCHW, Charles Schwab. We went over it already, but I just wanted to give it to you again. And it's already dropping like a rock, so that's why I think it'd be best to create the list, send this stuff out. I do it on Sundays anyway, so why not give it to you on Sundays and just put it out there. If you want this on Sunday night to prep your own homework rather than wait for me to cover it in Monday's planning and scanning, shoot us an email. Bother me, not Mary. No. Send it to CC both of us, M-Person and J-Person at personsplanet.com. And then say, I want to be on that list. I'd like to get this information Sunday night. I like to do my own homework as well. Next is a stock that I really like, but we liked it and we talked about it in the room multiple times near the $50 area back here, if you recall. And I kept telling everyone, hey guys, this is a seasonal thing. Kids love to take photos of themselves. Weekly low close doji. There's not a lot of seasonality because it's a camera. Now they might get into drones and everyone loves them. And while it might be great, relative to this last little consolidation here is not great. The space it's in, and I don't know if they've developed the drones or the cameras on the drones or if they got the contracts from the military. Don't know any of that, but I can tell you this. We have a low close weekly doji, and if the market comes back up into the 60, 61 area, and that's what it's kind of doing, you know, this is a stock that it had too much force to the downside. Volume was okay. The volume moving averages isn't telling me to get short right on the close, but I would look to see how this thing responds two ways. If the market gets back up to where it started from, around 62, I'd look at a sell. And then on the other side of the coin, I wouldn't wait for that low. I would look for the market to close below this close right there. If you close, so your areas to sell is wait for a retracement up here and see what the conditions are for a sell near 62, or look to see if this thing closes below the August 12th close. If it closes back underneath the August 12th close, then we've got another test of the low near 50 or lower, okay? So that's how I would play GoPro. That's really strange for me to want to put a sell on that stock, but it is a weekly high, low close doji, and the whole camera business in September, you know, unless it's the military might that's going to get them into high gear, I must warn you, high close doji marked the bottom, and perhaps the low close doji could mark the top for the interim time frame in that market. Last but not least, WBA. This is Walgreens. So Walgreens, low close doji, quarterly pivot resistance, flat line on volume. What the hell? I mean, that, my friends, is scary. Flat line on weekly. Flat line on daily. In a seasonally weak period of time. WBA, I'll be looking for puts outright on this one. And I would give that, I think if I'm going to trust the indicators, the low close doji, the resistance, the huge run up, the seasonal downturn that lasts going into October, the whole thing, I'll be looking at some, at the very least, we got objectives here, which might not be a lot, 87. You know, we got to check its optionability there, but obviously we want to, perhaps we get a little bit more out of it than just, you know, back into 82, these lows here. But this stock here, big run up in the weekly, big run up on the daily, big run up in the monthly over the last 2 years. And it's not as strong a volume that we have seen, and it leads us to suspect that it's you know, got time to consolidate at the very least, if not come back to its longer-term quarterly support near 80 bucks. I mean, that's not a hard call. Risk is $6 to potentially make 11, but I think this would be one that could be for the next 45 to 60 days credit call spread if it's fairly optionable, okay? And we'll double check that. Reports this week. I kind of got lazy and did something different. We have this thing called e-commerce retail sales and housing market both at 10 a.m. I didn't put each report separately. I just combined them if it's at the same time. So, for example, I think I doubled up things and didn't do it right. I should have done this again. We do have leading indicators, existing home sales, things of that nature, weekly jobs, Philadelphia Fed survey, and the big one will be the FOMC minutes. Every week goes by, every year goes by, every month goes by. I say that doesn't matter. They already came out to say things, but you know, it proves me wrong because it talks about someone that's has a different of opinion, and they give their opinion, and it's in the minutes of who's dovish, hawkish, who wants rates to stay low, who wants rates to be raised. Anyway, so that comes out, by the way, 2 p.m., and it has rocked and rolled the markets in recent history. Earnings this week, far few between, but a few interesting ones. Mostly Walmart tomorrow, TJ Maxx, Home Depot. So that would go in the consumer discretionary sector. Staples, Target, NTAP, Limited Brands, Victoria's Secret, listening to what they Hormel's had some moves before. Kirkland from Costco's Marvel, Ross Stores, Stage Stores, Steinmart, I think, is SMRT. And then Hibbert Sporting Goods, John Deere, and American Eagle Outfitters. So retail apparel, I mean, did they really sell a lot this last quarter? I don't think so, but the sector's mixed. It's a very mixed sector, and we've seen that between the difference between W and Nordstrom's, and then, of course, Macy's. There's the difference. One stock's loved, one stock's not, blah, blah, blah. And I didn't mean to go with the blah, 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 but, you know, that seems to be where this market is. Not all stocks in all sectors are doing well, and we've seen that with the insurers. That concludes today's planning and scanning. Gave you some ideas for stocks as far as the health of the market. Read the weekly thoughts, and we'll continue on with day trades, as well as continue with some upside potential for the week in gold. Let the trading range continue. Everyone, I'll be right back with you in just a minute. Thank you all.